The 2nd of October 2018 updated 58 seconds ago. Manufacturing PMIs, both official and Caixin, showed that manufacturers have lost export orders, and are relying on domestic demand. We believe these are the results of the trade war. China's manufacturers have fewer export orders, and therefore it affects imports. They are using inventories for delivery. This paints a picture that the export-related manufacturing sector could shrink in the coming months. In fact, the data breakdown shows that medium-sized manufacturers have suffered from the contraction of PMI. These are all expected, but the speed is still worrisome. This is relatively fast, as we expected that some exports would front-run tariffs imposed in September. 50.8 China manufacturing PMI lower. It is quite obvious from the breakdown of PMIs that domestic orders are still rising, and this could mean that exporters are turning to sell in the domestic market. This may create a positive vicious cycle only if most of the exporters can find a domestic market for their goods. Though it is easier now than back in 2009, still we believe that not all goods are suitable for the domestic market. Some exporters could eventually close their businesses. 48.0 versus 52.0 hinting exporters turning to domestic market. The government is trying hard to help these exporters. For example, tariffs collected from the U.S. have been dispersed to affected companies, and the central bank is giving out tax holidays if banks lend to small and medium-sized enterprises. Again, not all exporters could survive even with these policies in place if they have lost their export orders to other economies that do not face U.S. tariffs. We think that damages are unavoidable. Fiscal stimulus could do the magic, but this time is no different, with more debts piling up, and awaiting the trade war to pass to clean these debts up. Domestic market a way out for some exporters. Bloomberg.